What's going on YouTube? It's Mr. TCee from Certified Traders. I would like to thank you all who have been watching my videos and subscribe to my channel. I have seen your comments in the comment section and I would like to take your comment into consideration and to show you how grateful I am today. You will see me in front of the camera explaining my strategy, and it's rare seeing me on camera, so just know it's a banger. I hope you understand and be more profitable. Welcome back to my YouTube channel. If you are new here, you can join the family by hitting that red subscribe button. Turn on the notification bell icon for you to be notified when each and every time I post new video. Anyways, I'm not here to waste anyone's time. Let's get straight to today's business.
So this is the smallest account I ever traded so far. So it's a 10-cent account. So now let's see how it goes. And I already executed my first trade, and its volatility 151 is usually when I'm raising accounts, volatility 151 is the pair which I use.
A few moments later.
Alright, so 4 hours later, after holding these trades, the trade managed to get in profit of 76 cents, which is not that bad. So in other words, I can say for you to make a reasonable profit while you are using a smallest lot size, the secret is to hold, because if you try to do the opposite, like increasing lot size, you'll probably blow the account because of over leveraging. Okay, so right now I'm gonna close this trade, and you see it's now on 0.84 cents, which is not bad from 10 cents. Okay, which is not bad. So don't worry about the analysis and the entry, because that's what I'm gonna do at the end of this video. Okay, so right here I see another opportunity on volatility 151s, and in this case there was a trend line and then the rejection area, and as soon as the market starts to approach the zone marked with the reds, which is the support, the reversal pattern, which is head and shoulder, is already being formed. Okay, it's already being formed, so no need to wait. Once I see a setup like this, I'll say the market approach a rejection area, and at the same time it's a support area. So I'm gonna enter my buy on this 0.84 cents on this setup, and I think two position are good. Don't forget to look at the time. Right now it's 10:59. Okay, I want to show you that patience really pays well. Okay, patience really pays well. So let's see how many minutes or hours that we need for us to make a reasonable profit. How many hours and minutes that we need for us to make a reasonable profits, because me, I believe in holding trades. I believe in holding trades for a long time.
A few moments later.
Right, 3 hours 51 minutes later, you see right now I am in profit of $2.07, which is not bad. Okay, which is not bad. I want you to take a look at the entry. You see the market turned instantly as soon as I entered the buy. Okay, as soon as I entered the buy. So this B.O.R strategy, it seems like it controls the market. Okay, though that's not true. We just react to how the market is moving, and we use that movement as an opportunity to make profit. So right now I'm gonna close with this little profit. That's a huge return. I close with $3.03. Okay, I close with $3.03. So I'm gonna show you the history where I entered the trade and where I moved out. You see where I entered the trade and where I moved out. You see the history on the support zone marked. That's exactly where I entered the trade. That's exactly where I entered the trade. All right, fast forward, same pair, same analysis, and same concept. I saw another setup on volatility 51s, and you know, as usual, I just draw my inner trend line connecting the peaks and then the rejection area, because right now we're focusing on the second peak of the head and shoulder, and that's where we wanna enter the buy. Okay, so I'm gonna enter my buy right here using right now we increase the lot size because my account is a little bit big, so I had to increase the lot size from 0.01 to 0.2, and in this case On this trade I ended 5 trades. So let's see how the market goes. Let's see how the market is going to react to the B.O.R. Let's see how the market is going to react to the B.O.R. And this type of setups rarely appears on the chart, but once you see it appearing, usually it will not disappoint. So we have to be a little bit patient, and I'm gonna close my MT5 once I see that the trade is not in profit, because right now I entered too many position. If it goes against, I will blow.
A few moments later.
Alright, so 30 minutes later, I'm now in profit of $6. I want you to check at the end, right? So my secrets behind this type of setup is how I draw trend line. Okay, my type of trend line is the one which determines if my entry is going to have a drawdown, or my entry is going to turn instantly as soon as I entered. And in this case, or from all the trades which I've entered so far, from 10 cents to $3 right now, the market was turning instantly as soon as I entered the trade. So the quality of your trend line determines the quality of your entries. Okay, so I really advise you to invest knowledge on how you draw trend line if you want to come up with this type of entries. So I'm in profit of $6, 6 cents, and I guess it's wise to close with this little profits, because the account already grew by more than 200%. All right, check the history where I entered the trade, and when I closed, you can even see that there was no any little drawdown. Okay, as soon as I executed, boom, the market went all the way up, and that's how I made $6 from $3, just like that. Now that the account is a little bit bigger, it's now time to trade pairs like Jump Index, and this one is Jump 75. Okay, so I already took a sell, and let's see how it goes.
A few moments later.
4 hours and some minutes later, we are now on $61 equity, 53 floating profits. Okay, so you can check the entry. Same concept, same analysis, different approach. Okay, and right now, here's the results. From 0.10 cents, we are now on $61.74.
A few moments later.
And 7 hours later, the account is now on 101 from, guess what, 10 cents. Unbelievable. So this is how I trade small accounts. This is how I grow my accounts using the B.O.R strategy. So I'm gonna do the proper explanation on the chart so that you understand where. So right now I want to do a quick analysis on how I've been managing to get sniper entries with zero drawdown on such a small account using the B.O.R, which simply means the bullish open rejection or the bearish open rejection. So I'm going to be going through the whole process, starting from the analysis, the confirmation, and the entries. Alright, so this is how the chart looks like before any analysis, and I'm going to be using volatility 151 as an example. And you know, this is the pair which I usually use when I'm raising small accounts, because the margin is very good. It doesn't have a big margin, especially when you're using the lowest lot size. I'm sure that the margin for the lowest lot size is 0.09 cents, which is really cool. Okay, so when I'm analyzing, first thing is to mark the major key levels, which is the support and resistance. And since these are the turning points, it's wise to already know where the market is going to likely to turn. Okay, so I mark the area which have been respected most of the times, and as you are seeing, I've connected
the zone of support and resistance. And then this is the first stage, right? Because I'm gonna be going through each and every stage. This is the first stage, and then after marking the horizontal line, and then I drew my my trend line. And when I'm connecting my trend line, I first I first connect the first peak, and then the second peak, and then on the 30, that's where I anticipate the market either to bounce on the same zone of the horizontal line, and then the trend line, like intersection of the trend line and the horizontal line. And exactly on the intersection, that's where I will be anticipating a bounce. Here was the first peak, and then right here was the second peak, and then on the 30 we didn't enter the trade. And you can see that as soon as the market starts to approach the trend line, the momentum even increased, and this shows that there was no any signal for a sell right here. Okay, so this was an obvious breakout. So I had to wait for the market to come on the trend line, and I want you to take a look right here on the same zone which you have the trend line bounce. It is also the same zone which I drew this horizontal line. Like if you check right here, there's a support, another support right here, another support right here, another support. So that's why it is really important for you to first mark this horizontal line, because history will always repeat itself. If the market managed to bounce right here or to bounce right here, there's high possibility that it's gonna come and bounce on the same zone. Okay, so this is the advantage of drawing the horizontal and the trend line first before you take your entry. And then after this, we go on the third stage, which is the reversal pattern. And we have got many reversal pattern, but I usually use the M-shaped and the head and shoulder. All right, so that was that was an example for a buy setup. And right here is an example when you are looking for a sell. Okay, and as I said on the previous setup, first thing is to mark the major key levels, since these are the turning points, and they will help you to identify or to see where the market is likely to turn or to change direction. Because what is really important is to see the turning point, and the only way you can see the turning point is when you trace the price movement using the past history. Like I said, history will always repeat itself. If the market managed to change on a certain point, there is a possibility that if it came again on the same level, it is going to do the same movement. Okay, like for it bounce on the same level, and again right here it bounce on the same level, and unfortunately on the 50 attempt, it's made a breakout retest, and then it continued with the sale. Okay, so it's not always the case that if the market reaches a certain level which was respected most of the time, it is going to bounce. It's not like that. Sometimes it will break. Okay, but we have to take advantage of the movement which happens, usual of the movement. You have to take advantage of the zone which are respected, because usually it bounce on that zone, or it makes a breakout and then came for the retest. So if you are a retest trader, you can take that advantage, and then if you are a bounce trader, you can take that advantage. Okay, anyways, that's not what we are looking at right here. After marking the horizontal line, next thing which is the second stage is to draw your trend line. Okay, and as I always emphasize, when you are drawing your trend line, you have to first connect two peaks. Okay, you have to first connect two peaks, and in this case the first peak is right here, and then the second is right here, and then on the 30, that's where we are anticipating the market to go in our direction. But first, before we take a look on the third peak, there must be a breakout, and then on the third peak we will be trading the breakout of the retest of the trend line. Okay, so another thing that we have to take a look at is the intersection of the horizontal and the trend line. Like in this case, the area where we are anticipating the market to bounce is the same area with the support. Okay, as I said earlier, on this zone the market came and retested. So if it happens that it respected this level on the previous history, there is high possibility that it is going to come again on that same level and then respected the zone. Okay, like what happened here, as soon as it came on this resistance, it bounced and then started going all the way down. Okay, but that's not all. Remember, this is second stage, and then the third stage is to look for a reversal pattern, saying this is a triple top, and a triple top is also a reversal pattern. Okay, yes, this is the third stage, and then the fourth stage is the candlestick formation, right? You see right here the candlestick after bouncing on this resistance. Here the candlestick had high momentum. Okay, it had high momentum, but once it started approaching this resistance level, the momentum started reducing. Okay, and this candlestick represents rejection. Okay, once the market reaches a certain level, it creates a candlestick which shows that my price failed to break above a certain level, and then it bounced and then started going all the way down. So this was another confirmation. When the market presents a setup like this, there's no need for you to wait. Okay, there's no need for you to wait, because all the confirmation are confirmed, and you have to check your sell right here. Okay, you have to check your sell right here. Like those simple concepts, those simple basics, concept of support and resistance. You sell on resistance and then you buy on support, and right here that's where the sale was. Okay, and as soon as someone enters the sale right here on this intersection, you see the market started going all the way down. So this is something which is easy and which is simple to do, because right here you can have the bigger view of what is really going to happen, because after all this you can actually see where you can put your take profit or your stop loss using the horizontal line that we have marked on the first stage of your analysis. Like right here we mark this level of support, which means that if the market sells right here, the first take profit level that we're gonna use is this one, the support zone, which is right here. Okay, and you can see how the market reacted to the zone. Of course the market failed to break below for the first time, and then after making the retest, it came again and then it started going down. Because if you're someone who doesn't know when to move out, you can take a trade with good entries, zero drawdown, but you'll be surprised that the trade might get in profit for a long time, and then the fact that you don't know when to close, you can make a lot of profit, or you can see a lot of running profit, and then you'll be surprised to see that winning trade turn into losing, just because you don't know when to move out. Okay, so this was the first take profit level, and then for the second take profit level, we are going to use this previous support after this one, and then for stop loss, obviously you use the highest peak of the zone. Okay, and in this case the highest peak was right here, so this was the stop loss level. Okay, and looking at this, you can even check the risk to reward ratio. So we are saying the entry was right here. Okay, and then the stop loss was right here. So the risk to reward ratio on this setup using the first take profit is something like 1:4, which is really good. Okay, which is really good. So this is the simple process which I go through every time when I'm looking for a setup, and this is the same process, or this is the same analysis which made me raise an account from 10 cents to 120 US using the rejection, the bullish open rejection, the bearish open rejection. And let me repeat this again. This strategy is more focusing on the candlestick formation. Okay, it is more focusing on the candlestick formation. You have to know the meaning of each and every candlestick. Okay, so what I'm gonna do right now is I'm gonna send the PDF for the candlestick in my Telegram channel, and that's where you're gonna download it, and I'm gonna pin it in my Telegram channel. So if you are not in the channel, I advise you to click the link in the description, and then you join the Telegram channel, so that I should be able to know the meaning of each and every candlestick. Okay, because with this support and resistance, the trend line alone, you cannot be able to make profit. Okay, you have to combine all the concept of trading, starting from the major peaks, the reversal pattern, the candlestick formation, then you come up with a good trading system. Okay, so this is how I take my trades on small accounts. This is what makes me win trades, and this is also what makes me a profitable trader. Okay, simple, straight, no stress, no sweat. Okay, so see you on my next YouTube video, and if you have any question, you can type in the comment section, so that on my next video I will take your comment into consideration, and try to explain and give you further information, because at the end of the day, the goal is to see the whole team winning. Okay, the goal is to see the whole team winning. No need to be selfish with information. Okay, so that's it.